All right. So we've got stock trading, initial investing, and then also new trading in the past. And now we're transitioning to cryptocurrencies. Let's explore the cryptocurrency market and what was really getting traded every single day. We're not really going to look at longer term investing in buying Bitcoin, buying the big names. The deal with that is you just buy it and, that was that. You could definitely make good profits. It's like trying to swing trade an index, right? So considering the overall volatility of the cryptocurrency market at the time, the indices being the biggest coins, so Bitcoin, we're just going to focus on that as an example here. Obviously, there's other top, 10, 20 currencies. Those were kind of like those were basically what you would consider like an S&P index to be, and the extent that the market usually followed the index. Except instead of this case, it was the thousands of little altcoins or small cryptocurrencies followed Bitcoin usually, right? To an extent. So you can make really good percent gains swing trading Bitcoin or the big ones just because the market was so volatile. You can make 20% in 10% in a really good trading day just by playing off movements in the really big coins. But just like in the stock market, where yes, you can make money trading indices and ETFs or whatever, the real money to be made is trading the smaller stocks, trading the ones that are going to be more volatile. But you can limit your risk and create very strong returns using technical analysis, right? So that's the same kind of mentality I brought into the cryptocurrency trading market, was finding the smaller, less known cryptocurrencies, just like less known stocks, and basing analysis off of pre-existing gains. So like we talk about in the book, looking at gains already and then building off of those gains to reach greater heights. So basically finding the cryptocurrencies, finding the stocks that are doing very well, and then try to apply technical setups, technical indicators to those positions, to those cryptocurrencies, and finding even more, active trading gain potential in that position. So, with that said, you find new screeners, and every single day, right, you're just looking at top gainers or top losers, usually top gainers, not top losers, just because of what we talk about in the book and the mentality behind losing stocks or losing cryptocurrencies. It all really translates the same from stocks to cryptocurrencies. Technical analysis, diversification, you name it, it was essentially the same game. With the exception that cryptocurrencies were just so much more volatile, so you could have just extremely large percent gains in that market. So it was very, very, not necessarily easy, but I mean, if you had your technicals down and you had your fundamentals down, and you really kind of understand what's in the book, then making massive gains on even the small account we started with, like $1,000, like it was a lot faster than really most traditional markets, right? So basing positions off of strong technical skills, and even with just moderate trading at the beginning, it was like, just making smaller scalp trades, you could have a whole portfolio go up like 90% in a month, and then that was like considered, mediocre for the whole market at the time. And if you don't have a whole lot of experience in financial markets, maybe you don't know what 90% is, really means for a whole, segment of a portfolio. In a month. It was a very significant gain, and it shows really the insane growth that was in the cryptocurrency sector at the time, because basically every day it was like, oh, how is it going up this much, right? And it was a lot of stuff where it's like market manipulation, but at the same time, the whole market has to move for the price to be justified. So it's not like, you've got to have a lot of money moving into any sector for there to be gains like that. So you've really got a consensus where everyone is just having increased valuations on these cryptocurrencies. So we're talking September, I'd say 2017, and into October. So we're doing trading consistently, especially with like single day positions. I'd see a lot of my positions based off of international time zones. So I know it was like 2 or 3 in the morning here in New York's time or Eastern Standard, and you would have people in Korea waking up, people in China throughout the day that were going to get getting up, and they would just be moving their money into cryptocurrencies. So you can make really nice gains in very, very strange hours of the night just trading off of international cash flow into cryptocurrencies, because of the way the market was set up. And just looking at historically the cryptocurrencies, I mean, they were just moving so quickly, right? You'd have coins going, 20% just up and down in a night, and you could kind of understand the technical patterns behind it, and you could find really good setups. And 10%, 15%, stuff like that was just very predominant in the marketplace in very short time periods, based off of fundamental analysis of maybe the marketplace demand for certain projects, certain coins, but to a greater extent just technical analysis. And that was where you really started to get consistent and just phenomenal gains. And with this whole trading time frame, I think it was a very interesting time, because I would basically, I'd have cross country until 6-ish at night. So like I would get home, and then usually I'd work on the mining rig, which I talk about in the mining rig video. I don't know, probably 2 or 3 hours. I feel like something like that. Just while doing homework, or it was usually just going hard on the mining rig, and just software engineering. We talked about it in the mining rig video. It was just a lot of work, right? So I'd be up pretty late, and you would start to really see these huge market movements in the middle of the freaking night, because that's when people traded these financial markets, and you would just have stellar single day gains because of that, and all your positions would just kill it. And then at the same time, you go to school the next day, you go to work or whatever, right? And you can make very strong swing trades based on medium to long term, 1 month, 2 month outlook technical analysis, where you're swing trading, say in the stock market versus in cryptocurrencies. It's like you'd make maybe 20% in the stock market, and you're like doubling your money in crypto. I mean, it was just a very inflated market, and there was just so much more volatility. So your downside was bigger, right? But if you set strong stop losses, then you were going to have good diversification, good portfolio risk management, and overall, if you're following the techniques we lay out in the book, and risk-reward ratios like we talk about in chapter 35, I think, and throughout the book, really, with technical setups, there was just phenomenal opportunity for compounding growth, because the markets were moving so quickly at the time that you could have just insane percent gains. So October, comes through, and we're basically doing the same thing. We're going really, really hard, and we're getting superb returns. That was when the market started to get a lot of attention. Cryptocurrency started becoming part of mainstream media. From what I can remember, that was when stuff started to really blow up with Bitcoin. And I had, you're invested in Bitcoin, sure, right? So it's like, makes sense on a cross-sectional basis, because, all of a sudden, right, if the whole index, quote unquote, is going up, then you're just going to have that much more profound gain in these smaller currencies. Overall, especially when Bitcoin, they were taking their trip from like, I want to say 4,000 to 12,000, something like that. When Bitcoin dominance started to really pop up in the market, before the November downtrend, you would start to see like medium-term altcoin positions in these smaller currencies. Those medium-term positions were slumping a little bit, because everything was based in value off of, or at least most things were based off the value of Bitcoin. So if you were trading say something like Neo or Verge or Stellar, like these smaller altcoins, like Feathercoin, Stronghand, the stuff that you knew going into it was like, like a penny stock basically, like the stock, like not a penny stock, but the 9 to noon stocks that we talk about in the book with screeners, right? They're the stocks that are inherently more volatile, and they're the ones you screen for lower management, marketplace visibility, and we lay out all these principles in the book, right? But basically you're looking for just the best possible positions for percent gains in the long run. Those were the kind of positions we were applying the same mentality to stock screeners that we talk about in chapter 36. That same mentality applied to cryptocurrencies. So, excuse me, those positions would slump in the medium term, since Bitcoin, the whole market was really judged off that. So if the value of what everything is compared to goes up a lot, then the relative US dollar value, usually it would slump or it would decline a little bit. So you had holdings in Bitcoin and you had everything else that wasn't being actively managed. And you would see the stuff not, the good altcoins, they would just kill it. Like Bitcoin, when it's not moving very quickly, they would just be like 10%. They would just have consistent, just insane growth compared to traditional stocks. And then when Bitcoin similarly was doubling overnight, it was like you'd have the same downtrend go down in those. So it was kind of like, the diversification examples we talk about in the book, where one goes up, one goes down, one goes up, one goes down. Point is that there was just phenomenal overall portfolio growth. So you really started to see your account, multiply really quickly, because the market, it was just money flowing in, and people were buying and holding. And when those two combine, you get a really killer market where there's tons of buyers and comparatively few sellers. So the market goes up and there's just great gains all around, really starting to get into a sense of, okay, something's a little sketchy. But at the same time, you're realizing all of this unknown value in the space. So the whole sector as a whole is growing, and then the news coverage is just like frosting on the cake, right? Where you see it taking mainstream attention, and it just fuels the fire. So I'm gonna actually, this starts this, November, December. This is where we start to get into that video on how I lost 100 grand. So I'm gonna transition a little bit, just if you haven't seen the video, I think I'll probably do it after this. So we're gonna talk about how that went down. But the point is, stuff was starting to reach its peak, but the really active trading was still doing phenomenal, right? And you saw just these great market returns in the sector, and they were continuing. The only place where you were starting to see things dwindle, it was in the swing trading, not based on technical, the swing trading based on fundamentals. The technical analysis swing trading was just killing it because you have high probability technical setups. And the fundamental swing trading was really just a market play, looking at the market indices, how everything's moving overall. So as prices got inflated, point is that fundamental investments were playing as the market was playing. You were getting the returns of the market, plus or minus, and strong overall returns. And on the other side of the spectrum, technical analysis trading was bringing in consistent returns, and very, very strong, high percent return positions repetitively and consecutively. All you had to do was put in the time to find and analyze these cryptocurrencies, and they were just killing it. So that was the market buildup in 2017 in cryptocurrencies. it was a great transition, I think, for me. It really fueled my passion for trading cryptocurrencies. It was the same rush, the same great feeling you felt with stock trading 9 to noon. And the positions were only multiplied in value. So you started to get, just a great, like a massive portfolio growth. So yeah, I think it was a really interesting time. Cryptocurrencies obviously died down now in popularity, but during the time it was just great growth expansion, and obviously the fundamental plays aren't going to perform in the long run. So we'll talk about that in the 100 grand video, just for simplicity's sake. But you really did start to see people recognizing the potential value and speculative future value of blockchain technology. So it was a really, really nice market time period and a very stellar trading opportunity. All right, thanks guys. Look forward to seeing you next time. Have fun. Bye bye.